Good morning, everyone. This is Rose. Today is Wednesday, May 22nd, 2 minutes after 9 a.m. Eastern Time. Give me a second. Just trying to launch the Discord. Okay, while it's launching, I'm going to go through quickly some of the news items today. We have Fed members scheduled to speak around 9:40 a.m. Eastern Time. Existing home sales at 10. And then the most importantly, the FOMC minutes will be released at 2 p.m. Eastern Time this afternoon. But before then, 1 p.m. also 20-year bond auction. So you guys need to pay attention to that before the FOMC. It's not the actual FOMC, the regular meeting and the Q&A session with Powell. It's the minutes that will be released. But still, it can move the market. And on the daily chart, you can see that prior day was so Monday was actually a bad sell signal bar. It closed at still bullish, but it closed on its low. We have a double top here. It's not a good sell signal bar. When it closes like this, no one is going to sell. And in fact, we could have buyers underneath that bar. It was a high one. We had a high one buy signal here, but once you buy high one, there are sellers up above. We're just testing the highs, and then it's probably going to come down, but you can see that the bears are not able to sell the market just yet. We keep making new highs. So yesterday ended up testing the prior day's low, the bad signal bar's low, and then found buyers, and immediately at the open started to reverse back up. So it ended up a bullish day, went into a trading range first, and then made a couple of flags and had a breakout at the end of the day. Just give me a second. Let me get to the, okay, here we go. So we have NVIDIA earnings release coming up. I'm not sure what time it is, but it could be after the close. I haven't looked at the schedule. So that's a market moving event, and you guys need to pay attention. But really, today is actually could be a catalyst for bears to trap the bulls. Okay, we could make a new high today and then trap everybody. Now, why would I think that we could make a new high and then trap? Well, let's take a look at here. I do have a measured move target on the daily, which we haven't met yet, but we could reach that target. It could be around here. So we might be going towards the 5350, 5360 area and then come down. But this could be right here a reversal pattern, okay? So what the bears need to do is to close these gaps. So there is gap here, gap there, but right now the pre-market, we already kind of closed that gap because we are at 53, 36, 75, 37 area. So we are indeed down here. So what the market needs to do is start to take out, okay, all of these bull bar closes, come down and test this low. But there could be also buyers here wanting to trap the bears and then go one more time. But I think it's too late. I don't know. We'll see. If we cannot go below the EMA, we could just come down and then reverse at the EMA, go back up, trap everybody, and then come down. Or we're just going to keep making new highs if the bulls take over and we just have another breakout. But what could be the catalyst? That's a 10 a.m. news probably is going to be. But bears can sell this. I think they want to come down, bring the market down to here, this area, okay? But we need to see some strong bear closes. So hold on a minute. I actually sold the market. I'm trying to, hang on a minute, everyone. I'm in a trade here. I want to see if I can. I'm looking for a market to come down to 53.32 area right now. I sold into it, so I'm just looking for bears to extend this down. Just give me a second. It's kind of sometimes difficult to be in a trade and then trying to look at the charts. I mean, Bulls are still in charge here, but they have to make a new high. Now we have a triple top here, right? It could be a reversal pattern. We keep making lower highs and lower highs. If I see this area is taken out with bear bars, then that's it. Then we're going to come down and test this midpoint or the neckline. And we might come down close, pull back, and then continue to sell. We'll see. But we do have the 50 SMA is going to act as support, most likely. But if the bears start to get strong here, then we're going to come into this area. But that puts us into a trading range. But I'm not giving up on the bulls just yet. Right now, pre-market, I'm selling. I just want market to come down to 53, 31, 75, 32 area. If it bounce, we could bounce right here, 53, 35. But we start to move below 53, 35. We're going to continue to come down. So I'm looking to see is only, let's take a look at the, here is, so what I'm looking for is market to break this area because this was a trading range and we bounced. Yesterday my buy zone worked perfectly, and then the sell zone, it was right here. I actually sold twice and made money before the breakout. Is you see what happened here, how the bulls actually broke out? You see, this is what we have on the hourly. So we need to take out these lows. So that's what the market is trying to do. I want bears to take this out, come into here, and then bounce and use that as a resistance and come in here. This is where I'm going to buy if market comes down. So that's what I'm looking for. But first, I want to see if we can come down to the 53.32 area. Okay, so the NVIDIA, Tom says NVIDIA is around 4:20 p.m. Oh, okay, well, I won't be at my desk. But market has plenty of time, right? 40 minutes into the maintenance hours to do some violent price action before the maintenance hour at 5 p.m. Eastern time kicks in. Futures go into a halt at 5 p.m. Your broker could close all of your positions at 4:45 p.m. Some brokers do forcefully close it. Some brokers keep it open until 5 p.m. But you are in you have the responsibility to close your open positions if you cannot hold it overnight. Overnight meaning 1 hour maintenance until 6 p.m. Eastern time. If you're new to the futures, understand how brokers handle these last calls. I call it the last call before the maintenance hour. So that 1 hour is important because the margin required, day margin is low for many discount brokers. But in that 1 hour, your margin can go up 8 times, okay? I mean, something $500, it could end up being $12,000, per whatever. I'm not sure. I don't hold it, so I don't know. It constantly changes. It used to be a lot less. But it's now just insane amount, and I don't hold any positions open. So just check with your broker. They generally list that information on their website. Balance zone is, Al calls tight trading ranges balance zones because that's where the price is balanced. Bears and the bulls balance the price, their order sheet. So this is where market is happy. I have heard many times call these tight trading ranges balance zones. So I'm putting it there. Area of interest is something that I've been using. Is my prior life before Brooks price action. So there are people who follow me from my old trade room to here. They're familiar with that term. So that's why I use it. You can call it trading range. Obviously it is. But Al also calls it balance zone. So. They can, if market is coming from above, you're going to look for 2 tests and bounce. They can be support. If it's coming from down below into the zone, it could, I look for 2 tests and then sell. Look, so that's what I look for. You could see it was balancing here, came down, bounced, tried to bounce, failed, went sideways and came down, and then bounced again. So now I don't know how strong this, they might spend some time here, but it could also fail. if we break this without buying, we're going to come into here. But I don't know. Open is different. We get some violent reversals at the open. We do have a channel here. And if they decide to sell, this is what I'm looking for. Test it. We go back up and then sell once more from the midsection of the channel. So right now it's holding. These are extensions, breakout extensions of the channel. So if we break it, we could bounce, come back down, maybe bounce. We could even come all the way down here like that. Then I look for reversals, come back down and go up like that. For reversals, come back down and go up like that. Buy zone is another, if it's yellow like that, those are actually trading ranges. It's never been tested. You see that trading range? So when we get there, we could do this. There, we could do this. Okay, into here, then we could sell. That would put us into a much bigger channel, okay, for bears. That's how you know selling might have began on the higher time frames. Yesterday is also, this is last week's high, last week's mid is, and then last week's low. So all these levels are actually on the 5-minute chart. You don't have to follow along here, but we have them here. Last week's high right there is yesterday's high, yesterday's close, open of the week, yesterday's low. I'm keeping April high because we have tested it and did some very strong, get some very strong reaction from there, and then last week's mid right there and last week's low right there. Okay, so yesterday is because the prior day close was weak for bears. Market, I mean, you kind of, I said that all along before yesterday started, that I think we're going to test a low, but there will be buyers. So into the close the prior day to yesterday was actually a sideways market. And what I look for is look, you got a strong, okay, bearish move here. This is obviously a bear flag, but you are in some kind of a trading range. So if you're trying to sell and look for a breakout, bearish breakout, you may not get it. And so you look for bar 1 and 2 to be bear bars to say, okay, this is a trend from the open for bears because it is a follow-through selling. Problem here is that we didn't get those bear bars. So we instead trapped with a double bottom. So at the open, market is always looking for some kind of double top, double bottom. It's looking for some kind of support and resistance. Okay, so that's what the market actually was looking for yesterday, and we got it. Strong bar 1, but it's not as strong as one might think. And another reason that support is right there. So here, I'm going to take that high. Bears are not doing what they're supposed to do here, by the way, on the pre-market. I'm still selling, but I don't like this. So I'm just going to wait a little bit. So this was support, okay, and I think I'm going to change the color. So that was the support, and we bounced, tested and bounced, but the bar 1 has a strong, prominent upper wick. It's not as strong, but still, it's a good close to me. So I said, everyone, we're probably going to test the close of yesterday, bar 81 close. And I had a target which was slightly above 53.31 was my target. I got that target. Give me a second. I got that target yesterday, and then I start to see a wedge top here. I warned everybody that this is we're testing where the target, the problem here is that I cannot sell this because bar 9 is a expanding triangle. So it's actually a flag, okay, with combination of 7, 8, and 9. But because it's sideways, I'm looking for bulls to get above that blue line. That is the apex of the flag. And the bulls start to get above it. So I was keeping a one contract there after scalping here. I added another contract above bar 12. So to me, that was go long and test these highs. I posted a how I trade the open quick video tip on Discord and Brooks Price Action Facebook group. So if you want to go and check it out, there is, if you can't find it here. So we went to that and I took profit there as well. But really, I was looking to see if the bulls can actually close this gap right there. When you have a strong bear gap right there, okay, you can't assume market is going to break that at one go. Okay, that's not going to happen. So I look for what the initial reaction was from that area. Initial reaction was actually not all that great. Look at that. I mean, bulls were so scared they immediately start to take profit right there. I was one of them. So I look for a pullback. I see a bull flag right there and a gap open. There is another gap open, right? So what does this mean? We're probably going to bounce from that gap. That's a double bottom at the EMA. Gap open to the EMA we're probably going to try once again. But these gaps, if they're not filled and overlapped with bull bars, okay, by the way, I closed the short position because we went right back up again. I'm basically looking to see if we're going to be able to close it. This is the first time, and that's the second time the bulls are trying to close it, and yet they're still not succeeding. So what I have here ahead of time, I measure that gap's midpoint, okay, and I'm waiting because if we cannot close a bull bar above that midpoint at the minimum, I'm going to start looking for a bear signal bar, and I'm going to start selling because that's going to create a swing down with several legs. And at that time, I actually pulled up the possible, I call the roadmap of the day, and I told everyone we're probably going to pull back under the EMA, and I'm going to try to trap the bears under the EMA, and I'm going to try to buy again and target these highs and this time close up this gap. Selling was very strong, 2 strong bear bars. There's a bear gap there now, okay? So, and that bear gap is right there. Okay, but obviously you don't see the rest of the price action. So that bear gap is open. This one is open. Bears are still in charge. We're definitely going to move underneath the EMA. We come to the EMA, they take profit, but that's a bear flag right there. When you have a gap like this, even though it's a trading range, that means you're going to get several legs down. To me, that's a spike pullback, bar 26. You're going to look for 3 small legs, 3 pushes down, if not minimum 2. So here's the first push, second push, and the third push, right? So where does it go? Look left, you have a small area of interest, aka balance zone. What happens at the balance zones? We test it twice. If we cannot close it, we're going to bounce hard. Bar 29 is the first test, bar 31 is the second test. Did it bounce? Yes, because that's how it works, okay? Basically, they're good, very strong buy zones, aka demand zones, okay? But they're called secondary demand zones if they are in between. Strong move up, pause, strong move up. When it gets down, it's going to test twice, it's going to bounce. if it hits some kind of a bear zone, it's going to try to sell, okay? It might take this out. As everybody else is selling, I'd be looking to buy once again, okay? So market comes down and bounces right there. So it does its work, what it's supposed to do. But now I'm targeting, are we going to be able to go up here? Problem here is the strength of the move. The channel is tight bear channel. You have several legs down. That means the starting of this zone now is probably a sell zone. And I determined that zone by looking at the last bull candle, which is bar 23. So the problem here again is that this is a strong leg. To me, it's a one leg. Why is that a one leg? Everybody called that. There's a wedge there. Yes, there's a wedge there because there's several pushes. You can count this as a separator. So that's the pullback. Another pullback is and the final. But what do you notice when you look at this price action? Did any of these bear bars highs, okay, it actually breached the prior bar's high? No, it didn't. So what does that mean? If the bars are not able to take out the prior bar's high, you're actually in a very complex one large leg down, okay? So that means if this is actually a one leg, I might need a second leg. And where do you think that's going to happen? It's probably either is right here. Forget about that gap for a minute. That's that secondary supply zone. It's probably we're gonna test it there, and there's going to be sellers there. So everybody who's buying this is going to get a rude awakening. They're not gonna go any further up to here. We have to try to sell twice here before we trap the bears in reverse. So you have to give bears a chance to get another leg. That's the first try. That's the second try. I'm looking for a good bear signal bar before the 50% of this level or the close of this, before the bulls actually start closing above it, then I will target here. I don't see that bull bar, but now we have the first sell, pull back, comes down and pulls back. Now I'm looking for a second sell. Bar 37 is a phenomenal bar. I actually sold underneath that bar. And I targeted this low, okay, and I targeted this bad buy signal bar, bar 6. I kept telling everyone I'm going to target these lows, bad buy signal bar 32. If we start to break below 32, that means we're going to test bar 6 and we can actually bounce there. So we did come down and test it, but couldn't close a bear bar. Now I'm looking for a reversal. If you're still selling, you have to exit. You can also count leg 1 is, right, pullback is leg 2, pullback, and leg 3. And then sideways, higher low 47, and the market starts to print really strong bull bars. Bears try to sell it sometimes in a trading range. When you get a bar like this, but generally it happens at the highs, not at the lows. That's the difference. So you have a trading range, right? Market was going like that. Or it's going like this, right? Suddenly you get a one big bull bar, right? Everybody buys it. That's deadly. They're going to sell that. If the bears actually close a bear bar in the middle of that bar, chances are they could sell even further down. That's how you get the reversal. But at the bottom, that's a different story. You get a bull bar, they will try to sell, but they're going to show you with a small bear bar, okay, is not reaching the midpoint. That right there is giveaway. This isn't going to sell. Machines did try to sell, thinking this bar is designed to trap the bulls, but know the premise, right? Know the location. Location is good for bulls. So that is not going to live long. So when the bear machines, they realize, wait, concept is good, but the location is bad, they'll exit out, and then we're going to get a follow-through buying. And we got a follow-through buying. Bulls actually closed, right? Closed that. Breached that sell zone with bar 26. Now it's no longer valid. And when we retested with 52, we're going to probably go higher. Where we're going? Right there. Since market sold with 2 legs down, when you have a 2 legs down, it creates still a strong sell zone. You have to look for, give bears a second chance to sell. If market is going in with strong two legs, that creates a strong buy zone. You have to give bulls to test it, bears to test it twice and fail, and the bulls to buy it. Okay, so you have to. So bulls are testing twice, not able to break. Bears are trying to sell it. Here's the first sell signal, 55, outside down bar, but it's also inside, outside, inside, followed by another inside, outside, inside, right? It's a breakout mode. Is it going to break out to the upside? Is it going to break out to the downside? Where are the bull bars? You got the first sell, 55, and then you got the second sell, 57. Terrible. I put my sell order underneath 57. Then I trailed it up to 58. I got in and I sold. Even better bar, but at this time you're in the third leg. So I'm taking profit here when everybody else is selling, because what happened? What do you have here that it could actually bounce? If you have three legs down here, what do we have here? We have a strong leg up, a pause, another leg up. So we got a secondary buy zone there that's strong enough that it's going to block the bear selling. I'm taking profit there when everybody else is selling underneath 62, is about to get trapped. And I'm about to exit and buy into those stops, probably above the lower high 61, okay? So if I'm smart, that doesn't mean I'm smart. I'm simply smart because I'm following the footsteps of institutions. Why would the market bounce here so strong? Well, first of all, if you're smart, that means you studied Al Brooks' course. That means you know there's three-legged move. That means you shouldn't be scaling with the third leg down. And that means you look left and there is a breakout test area. So breakout test area is that support, because there was a strong move up, there was a pause, and then there was another stronger impulsive move up, right, is by bulls. So this right here, everyone, is actually a buy zone, right? So if everybody else is exiting there, everybody else is selling, their stops are probably there and there, and market can run those stops and even go higher. So now I want to buy into those stops. I'm looking for a second entry buy signal. I've got a beautiful inside bar 64. I don't have to even second guess myself. By the way, market just started. I'm going to get back to the regular price action, is because when you have an inside bar from a really good location, you can simply buy one tick above bar 64. Or second entry, you look for a pullback. You got sideways market, but it doesn't matter. Market is buying. Outside up bar, that is a bull flag. Remember, it's a bull flag. Expanding triangle. We're closing above the apex. Buy above it if you haven't bought it. You're going to target the first stops there, second stops here. Market is going higher. So now you're counting more legs to the upside. Leg one, pull back, leg two, pull back, leg three. It's at the end of the day, maybe it's wise to take your profit and exit out of the market. Okay? So now look where we are. This is now support, everybody. So is what it was a resistance turned support. It is now support. So I'm going to okay. Let's see if bulls can close a bull bar here. But it's a bit of a, we have to get above the weave up, maybe back into this trading range, but I don't know. There's not much information here. Limit order buyers, both in this area because they know it could bounce, but they're scalping. If the body doesn't close bullish enough, then we can move underneath, break it. But I don't think it's going to be that easily to break. We'll see. It might. But naturally, it is right now support. So you can see that it's still acting as support. It hasn't closed as bearish. So I can't really sell, can I? Right now, bulls are buying because it is a strong support. They're trying to go back to the 76 low and 77. They're trying to overlap with bar 77. Therefore, we could test the EMA. What about getting above the EMA? I think we're going to come right back to here once again. If they start to breach this support with bear closes, then I'll sell. But right now, there's nothing here. It is support, so you have to buy. But there is resistance here. What do we got there? You have resistance there. And now we're testing the resistance. So we're stuck in a very small area. Market is deciding, do we sell or do we break this or come back and have one more go? Or do we just exit out here? So those bulls are probably taking profit there. Am I even trying to? Nah, that's it. Okay. Fed Goolsbee, I believe he's the second hand or right hand to Powell, has a speech somewhere in Chicago, I think around 9:40 a.m. Market is trying to break this area. But be careful, if bears start to sell, we could start to swing down right from there. Thank you. I'm not going to sell until I see a good sell signal bar, followed by another bear bar. You cannot sell, but those bulls start to take profit. They're not stupid. This is resistance. They're taking profit there just in case if the swing starts quickly. And that bar, if it's only a profit-taking bar and there are no bears here, we can get another bull bar. So my job is, since this area is too tight, there's nothing I can do other than scalping. And I'm not scalping. I was more into getting coffee. So I'm going to wait. Okay, patience. Because what the bulls see, a cup is impossible handle. And they want to trap the bears underneath the EMA and go right back up again. Okay, so we have an inside day at the moment. Let me get my open of the day. If I don't see market closing bear bars below the open of the day, we are obviously not bearish, so I'm not going to sell. So I want to see bear bars closing strong below the open of the day tick price, then I'll look to sell. But right now, as is, we're slightly bullish, even though we are underneath the EMA. So this could end up becoming a cup handle. It's a shallow cup, but it's a cup. So we could end up going and testing these highs. If bears start to take out the open of the day and break the support, then we have a magnet down here, 1 hour EMA. And we also have a wedge here. Okay, so we could break this wedge, come down, go back up, and then start to swing. So where is the next support or the buy zone? Support is at support. Where's the buy zone? Right there. Support is at support. Where's the buy zone? Right there. Oh, what the heck? How did that happen? It never hurts to be color coordinated, right? So it's bad. You cannot really sell bar 2. Not a good follow through, but still, bulls did not allow bears to close a bear bar there. But you're going to micro double top is below the EMA. So things are not all that great for the bulls. I don't know what 27% fib is for. I don't know what that signals or why that percentage is important. So I don't know. if it has some kind of a significance to you, then use it, but I'm not sure what that is for. You need bear closes in order to sell. You got an outside bar, bar 1, inside bar 2 is, we came back to the lower third of the bar 1, found some buyers there because they probably bought bar 1 close, and it just goes right back up. Could there be any sellers at bar 1? If the bar 3 closes bullish, that means they have actually trapped the bears. And if it closes bullish, it could go higher. But will it close bullish? That's the question. What bears see here is some kind of a bear flag, but we are below the EMA and there's no bear body. So that's a problem for bears. They're trying to close above 53.41 is to go higher towards 43 or 44 area above, maybe even 47, 49. So the market is trying to break this. Okay, it's broken now. Well, almost broken. It hasn't really broken. It's got a little bit more room. Probably it's trying to go. It's also, if you look at it, it's okay. We are above the apex, so bulls are trying to get up here and get a breakout. Some will say this is the apex, but that's not the apex. That's just a resistance. So we are above the apex of the expanding triangle, so it is still a flag. But it's also a trading range, so the bulls are trying to get to the 81 close. If that bar closes bullish, you're going to get a quick measured move target. You can measure it right now by using bar 3 range. But only if it closes. I'm just going to prematurely measure it. You can, if you're long already, that's your target, 44.25. I used to look at NASDAQ. Oil is the Russell, Dow. So I used to have all of them side by side, and I used to trade them. But again, those are the days that when I was all by myself, talking to nobody, and I'm able to take quick trades and move my stop to safety and break even. I'm able to swing trade or scalp, whatever. I can't do all of that anymore because of the rooms. There are some people can multitask a lot better. I am not one of those, so I'm focusing on this chart. There might be some resistance here. It would be better if the bulls can actually at least reach the close of yesterday, but one thing that failed to happen, bar 3 did not close a bull bar above the resistance, so you can also use this bar high as the resistance price point. But I think this is in a good bear flag formation. So we could come down, we could go back up, and then we would have a wedge top. Then we could start to perhaps swing. So there's a bit of a room up towards upside. NASDAQ is already, let's see, 1, 2, 3, or breakout 1, 2. We might get another push perhaps if we don't make a double top. Neckline is 3 low. We close this bar bearish or the next bar, then market will target the 3 low. We are above yesterday's high on NASDAQ. As long as we stay above it and this holds, market can make new highs. We're above it. As long as it holds, we can make new highs. Okay, so now we have a breakout from is the checking to see if my data connection is behind. I'm not behind, so let me take a look at your chart and compare. Well, I'm on a 5-minute NQ, so here, I don't know what time frame are you on? I don't know. Bulls trying to close, so get to the close of yesterday is I get a measured move targets from the breakout point 3, bar 3 body, but it's bar 2 high. So bulls are still pushing this higher. Now, what about going higher? Oh yeah, I gave up on the bears here because bulls are doing so much better. So the target for me, if we can break this resistance here, maybe we could come down a little bit, but continue to go up. Target is 53.45, 46 area. Then continuation further up. If we can break the 53.47 area, we're going to reach 53.49.5. So market is trying to get above last week's high. So good job, bulls. Keeping it contained within this wedge. Can we get a breakout from the wedge high? Yes, we can, but we could also trap those bulls up here. So to me, I think market can reach as far as the 50 and the 60 area, 53.50, 53.60 area. So bulls are still pushing. On the ETH I had yesterday I told everybody we will test this trend line and you can buy from there, and we did. So these highs are target, but you could see that is also resistance. Bulls probably trying to squeeze out of this resistance, but they got to do a lot better here. And you can now that you have more information, can connect those. But what about failing and then breaking down? Well, look left. Let's see, there was resistance maybe here. Yeah. So this is kind of the apex of this wedge or triangle. I may not have. Maybe there. Price action, and then retest, come down, and then retest right there. You see, as long as we stay above this price point right here, we could go and squeeze out from the top, right? It's holding pretty good. So whether it's the trend line or the horizontal, it's also an area where price got attracted a lot, okay? Eventually, we could go up, we could come back down and break below it. But right now, it's not in the cards, so the bulls are still pushing. And that's a 60-minute ETH. Bulls trying to close this gap, and they're trying to go higher. So I have a key level. This is the Asia session right here. Is Asia low is target. Asia low is 43.45. It could reach there, but we have a 10 o'clock news in about less than 5 minutes. We might need to pull back a little bit and then buy. We have a huge bullish gap on the 15-minute. If we do pull back in this gap area, there will be buyers waiting. And then I would love to buy that in here. So this is still a handle, cup and handle. But bulls did not close. So do we have a wedge top here? Up on this, down on this, up on this. Now we're coming back. We're probably going to have another leg. I don't monitor NQ, NASDAQ all the time. Member asked, so I figured I'd look at it. I trade the ES most of the time, but you can trade either or. Bulls trying to break these 53, 43 area to reach the 45 or 45, 46, maybe even 47 area above. But why is it so difficult, right? Why is it so difficult to get up there? Bears want to wedge bear flag, but it's no good bear signal bars. We're above the EMA, so it's always in long, and good reversal. Bulls trap the bears underneath too. I didn't want to sell anything because this support was never broken. We still have target. Okay, so existing home sales is coming up less than 50 seconds. We could, since this is a pullback, we could go up quickly and complete the wedge top. Could be a bear flag and then come down. There is a breakout test area from the bar 1 and 2 high. But this is a pullback. We moved underneath the 5 consecutive bull bars. Probably buyers underneath 5 might be buying already. So we could quickly, we might even make a new high today. We do not need to sell. We start to take out these highs. Could easily get to yesterday's high, is break above it and breach the last week's high as well. Brief resistance around 53.45 but since there's volatility in the market, we could breach that and go higher and then come down. We did not reach the small measured move breakout target, 44.25. So I'm expecting bulls to push this into 45, 75, 46 area. Maybe even higher if they can manage. Maybe even higher if they can manage. Some bulls taking profit here because technically this is a 10-point move. So they are taking profit. I don't want to see any bear bars or bear signal bars here. If that's the case, they can sell about 2-3 points. Maybe even they can extend it to 5 points and then reverse back up again. But if this bar closes bullish, we don't have to worry about anything. Market then will try to make its way up to 53, 45, 75, 46, and then follow through possibly 47. It's a pullback, but technically bar 7 it's the news bar. It's actually the third push up in this wedge. So up on this bar 1 high, pullback bar 3 low, second leg up, pullback 6, and a third leg up. So bears want to come down and check out the bar 6 low, and then further down into breakout test area, 1 and 2 high. If anyone's stuck here, they will buy here. Bulls still taking profit and the bears trying to sell there. I bought the breakout bar and I did scalp at the 10 point, but I'm still holding a runner for 53.47, maybe even 49 area above. But if we start to get bear bars stacking, I will exit out. Because technically we're still There's an open gap here. Is we have not closed above close of yesterday. I like to see bulls push us higher and give us a double top or something. What about wedge, double top, lower high, and then sell? Yeah, I mean, that's what I'm saying. If the bulls cannot take back the control, is start to get above the 10 point and then the close of yesterday, right? We could get such a thing. Then I would expect market to come down and test this area, and we would have up, down, confusion. And if we break this support, then we can end up coming down to here. So what the market is creating now is liquidity here, okay? So this area is liquidity. And what the market can do, it could move there, get some of that liquidity, and then go back up again. So we're in kind of a trading range. We're in inside open, inside day. Is nobody wanted to buy the close of yesterday. So we're pulling back. But if this is good enough, or if we do come down a little bit, we could still buy and make new highs today. So I'm still holding my long. It's also spike, pull back, wedge top, okay? Micro double bottom, 6 and 7. Bulls are trying to get a breakout because think about it. You got the channel trend line. If bulls start to close above this trend line, they're going to get a breakout. So the goal is to close a bull bar here as high as possible. Get to the target 40, 46 I'm going to mark, but it can continue to go higher, maybe like a 1 tick above. Right there. So we could reach these levels. That's what I'm targeting. What about failure? Failure, then we come down to the 40.75. If I start to see bear bars closing, we could end up coming down to here, okay? A second bear bar and the break of the breakout test area would be catastrophic for bulls. So I don't want to see that happening. We are testing the breakout test. Is we close the bar above is 40.75. Bulls can buy the close of that bear bar. But if it closes below 40.75, I'm not going to linger in this long. Some limit buy buyers, bulls are buying there. Trying to fix it. If they have is both above bar 3, they're trying to fix. Market can come down to 53.39 area. Why? It's the lower third of bar 3. Bar 3 is an outside bar. You have an inside, outside. Inside, we had a breakout, but we're not closing bull bars. We need bull bars to go higher, okay? So that could suddenly come down to here and then look for buyers as low as there. The buy zone is starting around 39.25. The lowest part can go all the way to the low of bar 3. But if bulls want to buy now, they can bring it down to the 53.40 and then bounce from there. So I don't want to see another bear bar here. But we get it, then we're going to pull back down somewhere here. Okay, so we got a bear bar here, and you get a micro wedge and a lower high, micro double top, lower high. Some bulls are buying the close of that bear bar because that's the setup, and they want to have a stop underneath, maybe like a couple of tick underneath 8, and then they want to get back up to where they entered. That's 42.25 or 42.50 is where they entered, so they're trying to push there. But if they breach that area strong enough, then they can continue to go higher. But if they fail, then we will come down. I like to see bulls actually start closing bull bars above 42.25. If they fail, I'm still holding this, but I'm ready to exit. Just waiting for a bar to close to see if I should exit. If the bulls fail there, I will exit. But so far, so good. Market is trying to reach the Asia low, 53.45. Micro double bottom, bulls need a outside up bar. If this bar closes on its high, then they're going to get a higher probability to reach this area, maybe even higher. It is a bull flag. If they cannot close, see that right there was a rescue event. They both lower, they both the close. They fixed it. If this bar closes bearish, I'm still committed to exit, but I want to wait for the bar to close before I make any decision. So it's only 18 seconds left. Bulls done their best to fix where they entered, maybe above 3, maybe above 4 or 5, maybe above the pullback bar 6, brought the market back up to where they were making money, and they fixed it. So now they have an even decent close with bar 9, but it didn't close bearish, so bulls got a chance here once again to get back to the 45, 45, 75, or 46 area. So what they need is another bull bar, and then we would go test the 45, 40, somewhere in this area, but we need another bull bar. We have an outside up bar, you have an inside bar, outside bar 7 is an identical bottom, so it is outside. But then bears try to sell it, failed. Bulls try to fix it, and they did. Close the bull bar. What bulls need here is a strong bull close, follow through bull bar, but it's going sideways. So because they see a wedge here, wedge top and a lower high, it's very difficult. We haven't really reached the Asia low, so that's still target. But we're testing 50% of this balance zone. So that's why we're getting rejection here. But we get above it, we could break above. Key zone is right there. I'm more interested in these Asia low and the key zone. So I want market to actually test about there, test about there. Maybe even higher. We didn't get our measured move target. It's better to just wait for a better reading here. But if you're long, stay in your long. But you start to see bear bars taken out this trend line, then you have to make a decision. Because it's sideways, so many bars, since is bar 3 high, bar 4, it's a limit order market, and machines go into action, and they see anything that they see strong close, bullish, they will sell, scalp at 2 points, and then try to close a bear bar and get follow through to its low. And then they see strong, bear closes, they will buy those, or underneath a small trading range. So we're stuck. Back to the breakout test area. 40.75, small trading range low. What a mess. I'm still holding because the 40.75 did not break. So like I said, it's a limit order market. Bull machines will see anything bear close will buy, such as bar 10. But look how the bar gapped up at the open from the close of bar 10. I did not sell anything or exited out of my long yet. So I'm still hoping the bulls will do better here, but it just doesn't look all that great. There's a double top, lower high, neckline. Bears want to break the neckline, 8 or 9 low. They want to extend down to here. Is probably buyers here waiting again. But I don't see back-to-back bear, bars. Here's a first sell. That's their second sell. But the problem with bar 10 is that it didn't really close a bear body below the open of bar 9. So to me, this is still bullish, expanding triangle flag situation. And I would prefer bulls to get above 42.25. We're in the middle of this wedge or triangle. So it's right at the center. It's really bad price action to do anything. So anyone selling their stops up here probably. They're looking for a 5-point, 10-point down. It's really difficult. Now what do we need is bears to actually move underneath the EMA is with consecutive closes to start the selling, right? We don't have that yet. So we're clinging to the EMA and we're keep buying underneath the EMA. So the bears really didn't start any selling just yet, except that they see a second entry short and they're selling underneath bar 10 with a stop order. But bar 10, yes, it's technically a second sell and it's actually started, but it's got a lower wick, upper wick. So I might actually finally exit here. I just want to see how market is going to behave here. We don't have a bear close yet, so I'm hesitating to exit my long. Is too early. So I want to see bears actually close a bear body. Yeah, bears kind of winning this at the moment, but still they're trying to get a strong bear close below the trend line and then retest and then sell. So there's about 45 seconds left for bulls to trap those bears trying to sell. If they manage to do that, then we will shoot up into this area. So this is why I'm still holding. There's a better place to sell up there, but market wants to sell, then I will wait for that signal and then act accordingly. So I didn't take the stop order sell is underneath bar 10, nor I exited my long. I'm still long. But I'm, at least to say, I'm annoyed with this. All right, we do have a close below the EMA now. Bears need a second close to start marking down the contract sizes. Then I will hit close and possibly sell. But I don't have that bar, so I'm not interested. So I'm still holding because this is a wedge bull flag situation still, and the market can still close above the 42.25 and then make me happy. So here we go. If this bar closes bullish, then that's the second sell below the EMA. Failing, that means M2S failed. Second sell from moving average failure, then we go up. So what do you have then? You have failure of a failure is swing. So what do you need to swing? You need two bull bars. You put a stop here or there, and then you look for 1R and 2R targets to the up. So far, we don't even have that first bull bar closing, but we might get that. So I want to see market test the bar 7 high, and then get a quick breakout into, like I said, 45, 45, 75 area. And then if we start to close above 45, 75 after a brief pullback, we're going to go up to these 49, about there possibly. Might even continue to go up further, but that's, first I want to see this tagged so I can make some money. So I don't know if you guys exited. I try to keep you guys in your longs. I am still holding this. Now, anybody who, if I were to sell, say I'm not holding a long position and I want to sell, there's actually a setup here, okay? There is a double top failure and a double bottom failure. But then we closed 2 consecutive bear bars. I would have had my sell stop order ready underneath bar 11, but then I would put my stop there. If I get filled, then I'm short, and I would look for a 1R, 2R swing, and that could still happen. If we fail once again, look how many times the bulls have tried, once, twice. Why can't we close here and go up there? Maybe there's a reason. That's because bears trying to sell here. They see a setup and they want to swing down. So everybody, if this bar now closes bearish, definitely exiting out. Especially there are sell stops waiting underneath 11 possibly. That's it. So the bulls are now pushing. All right, good for the bulls. They need to go take out the 7 high. Anybody who sold the close of 11, there's stops here. They can run those stops and accelerate up. So we still need a bull close above 42.25 to get to the 7 high. This is a messy start this morning. So we need the bull close. Then we can shoot up into the area I marked. But it's still sideways. It's still limit order market. There are probably now buyers above bar 12. Anybody who sold 11 close, selling again, trying to get back closer to the 11 close to break even. Bears who sold too early, in my opinion, still their stops are there. This kind of setup, I don't trust any market order because it's going to reverse right back up. I need 2 consecutive bull bars to say that the bears are trapped so we can go higher. I'm still not very confident if the bulls are going to be able to make it. They really need to get above the 42.25, and this is really messy. It is now, if you have noticed, contracting triangle. So it was expanding, now it's contracting. So I want to see bulls actually get above, get a breakout, go up here, go up there, make a new high. Bulls have a higher probability to go reach and test the bar 7 high is here. Still nothing. Still no consecutive bull close. But probably bulls want to test the 7 high. So I am more bullish here. But it's sideways and makes it even more difficult. It's contracting, is triangle. It's contracting, is triangle. So this is the last call for bulls at the moment. Is either they show up here or bears are going to take over here. I would stay out of this. Like I said earlier, like several bars back, very difficult to trade. All you have is basically 1.5 or 2 point scalp there, and that's about it. And there's not everyone can trade this. It's very difficult. You're stuck in this 2 price points, the higher one and that resistance right there. No consecutive bull bars above it makes it very difficult for bulls. See, 13 didn't close. I actually finally exited out. I can't hold this anymore because it's not giving me. The second time the bulls tried and failed. Tried. So now bears trying, right? Because they sold the close. In my opinion, that's bad sell, okay? You're not supposed to sell there. You're supposed to sell here. So those bears probably trailed their sell stops. Now they entered underneath 13. The goal is to get to where they sold earlier, which is the close of bar 11. Remember I said we're probably going to come down and test it? Look at bar 14. Bar 14 low is testing where they sold the close. But now they close a bear body, we could end up coming down to here, okay? Because then they trail their sell stops, those waiting underneath 11. I don't like the sell like that because if market is not all that bearish, if I sell here, that doesn't mean that it's going to sell. I could get trapped there. So I just sit and wait right there because if market is bearish, it's going to come down there, pull back, and then keep selling. I don't like to trail in the middle of a tight trading range. If market is bearish, let it show me. So if it closes bearish, then I might sell one tick underneath that bar with the stop above bar 10. Then I would look for a 1R, 2R, but it's just not a good place to sell with sell stop orders, not a good place to do anything. So we could get, basically what you have here is possible wedge bear flag, but we need a strong bear bar closing below the EMA. Is bringing the market down here and then reversing back up to the EMA and then starting to swing back down again. So if that's what the bears want, okay, that's fine, but I don't see it yet. So what I need is a strong bear close, okay, and then go sideways a little bit as the EMA comes in. We go back to EMA. That's where I would love to swing back in here. Otherwise, I'm not going to sell anything. It needs to show me because it can go up. This is still the target. It would be nice. Look, if you have a wedge top here, undershoot, overshoot, we could get a double top there and then sell. that would become the neckline, bar 1, low. So I don't see that bear bar moving underneath the EMA. As far as I'm concerned, this is still a bull flag. Barely trying to make its way, but I'm out. Now, if we start to get bull bars, I might just go back in again. Bull's trying to get a second entry long. First entry above 11, second entry above already started above 14. Is if the bar closes strongly bullish, then the bull's probably going to buy one tick above it. But at this point, I'm just waiting. Bulls still want to test the bar 7 high and get a quick breakout into 53.45. But first, they need to close a bull bar. So anybody entered above a strong bear bar, like 14, is kind of upset now. And I don't like to do that. I don't like to enter above strong bear bars, even if it's a second entry, possible second entry long. In a situation like this, I wait for a bull close. It could be sideways, but it's just the FOMC meeting minutes. Nothing about it's from the last meeting. It's not really FOMC. It's just a inside. We're in an inside day, okay. We're at the highs. Nobody wants to buy too high, so it's an inside day, right? So it's just going sideways. See, I didn't buy above 14 because it is a bear bar, and now market is trying to come back down. See, it's problem. And I saw that problem right here with bar 13 not closing above that level. Is I needed that second bull bar. I exited. So I also didn't sell, but anybody who sold now wanting to enter with a stop above 10, they're trying to get a maybe half R right there first, and then maybe they can get follow through. Now we might be getting that is bear bar I talked about. But now the question, will they close this bar as bearish enough? And then what you do is, even if it closes somewhere here bearish, right, it's going to drift down, and then it's going to go up as the EMA comes in. That's where you're going to look for a sell, and then you're going to swing down. But it's very important that they do close it bearish enough. So more it closes on its low, we're going to get continuation down before reversing back up to the EMA. So other bears entered as early as underneath bar 14, right? And many who had sell stop orders 11 also entered. They want market to come down. So we could drift a little bit. I don't like this bar. It's got a lower wick, pretty prominent, upper wick. It's not the bear bar I've been looking for, but it's still a bar that is strong. It took out the 11 low. Bulls see another bull flag here, up, down, up, down, up, and down. So they see a wedge bull flag. They want to close a strong bull bar that has almost no visible upper wick, so they can start to buy above it and get back above the EMA and test these highs again. This is such a mess here. But then they should not have allowed bears to close a bear bar is below the EMA. Now we have two consecutive bear bars, 14 and 15. So what the bears will do, they're going to try to get a bar with an upper wick, and they're going to try to drift this down. So they can at least get a half R right there. But if they fail, then you're going to look for a really strong inside bar. Closing on its high is with almost no upper wick. Bulls will start to buy one tick above that bar. So 16 has to close really bullish. Anybody who measured from here, one of the reasons why we're bouncing, because that's basically the 1R. But that's a much better sell. So I think some bears are still targeting this area. But what about left? Well, the bulls were strong there, right? So this is support, and that's why they're taking profit there. So it's very difficult to trade. I didn't take the short, and bulls can we get back above? Yeah, if they see this as a bull flag and close a strong bull bar, they can reverse this back up again. But I need to wait for a bar to close to decide what to do there. Because 15 didn't close the way I wanted to close. I don't like the upper wick. It did open underneath the EMA. It's a good sell. Would have been better if it were to close a lot more lower with a much smaller lower wick. So now everything's up to bar 16. If the bears can close this bar as low as possible, they will drift market down to 53.38 area. If they fail and the bar closes bullish, not interested in selling, obviously. It's a good close, bar 16, but still sideways. It's almost repeating yesterday's price action in a way, right? It found support and there's trying to get above the EMA, failed. Now it makes a bull flag. Some bulls are buying above bar 16. Like I said, if it closes above its midpoint, closer to the high, bulls will start to enter one tick above 16 because they see a bull flag here. This I don't care for this anymore because they failed. Bears failed there. So now we have another failed breakout here, bar 15. Back to the EMA. Is anyone who was selling will probably going to sell at the EMA and try to get a break even. Possible is they might see a possible double top bear flag, but bar 16 is way too strong. So anyone both above 16 looking for market to go higher. Close a bull bar above the EMA. And they can not only do that, they can actually finally reach this area. This is still the target. These are valid bull targets. Prior highs, right? These are all targets. So When will we become a lot more bullish? When we start to close above bar 14 high, and the actual price point would be 42.25 again. So 42.25 is important. Okay, we start to close above it, it's going to get bullish. I'm flat right now because I don't see any value in this. I'll think about going long if I see bulls actually close above 42.25. Sorry about that. Just give me a second. Just lost the. There we go. All right, here we go. So the bulls are getting serious here. It turned into a bull flag, and bar 16 kind of show you the way that bears were not going to drift this further down. Terrible close. 15, not a good bar. There's support here. This whole area is so leftover target here also. So the bulls are still targeting this area. They're probably going to get it this time around. Bulls want to get above the 7 high, break above the 53.45, test around 45.75. They can go even higher if they wanted to. What happens with bull flags, then you should know this by now, is you have a bull flag, right? Bull's already buying here. These prior highs, as they get closer, they start to take profit. It's not guaranteed that they're going to break, retest, and go higher. So you always expect some kind of a failure at these highs, okay? Is because, as far as I'm concerned, we can also get a double top and sell, okay? So bears are stuck down here. They see a trading range and they sell the high. They know bulls will take profit at these highs. They know that they're going to take profit at these highs. So they put sell orders here, hoping to reverse it back down. But you have 3 bull bars, and one closed very strongly above EMA. Bulls will probably going to buy it, and they will test the 7 high, and they will try to move it upward. So they need another bull bar here. We're not really closing all that strong above 42.25, but I think this is now bulls' turn to get to the 45.75 area. But I still don't have the confirmation. I really need a bull close above 42.25. Maybe bar 18 is a 1-tick body, but it's barely. No, it didn't close. It closed right at the 42.25. That doesn't make it any easy. So bulls need one more bar here to seal the deal, go test the 7i, take out the close of yesterday, reach the target. There is fallen trend line, and we're just testing that. That's another problem. But I think this is the target right there. Let's go. Getting really tiring. Yes, what we'll see on the 15-minute is a break of the trend line, test of the gap, and go long. So at least a test a high. I kept saying to you guys, if you are long, market wants to test the Globex Asia level low, which is 53.45. So we're pushing there. We're bullish now. So this is it. And we have a gap up open. So 44.25 always been our target. So this is basically now swing. So I want to see market get up here. 45.75, 46 is my target. There will be some sellers at the 45 because that's an institutional level, but we should be able to reach up here somewhere and then come down briefly. If we can break above this trend line, we are going to go up even further, possibly 49.50 or 49. So good job, bulls. We have tested the 7 highs. We just got my target 45, 44.25. I did enter long. It scalped a little bit, holding more, and I want market to now give me a lot more than what I waited for. So I want this, and then I want that, or 49, or at least last week's high. Okay, we're about to tag the Asia low, which was my target anyway, since open. That is 53.45. Put on the chart. I also want a little bit better, 45.75, 46. Might actually go and test is a little bit higher. That's 45. Looks like it didn't, but it didn't test, but it's just, it did. I just stretched the chart so much. So that is 45. It took a little bit of profit there, but looking for bulls to do is much better than this. But you understood why is I did not sell. And I wasn't going to sell anyway. I wanted to see a drift and then pull back to EMA, and I wanted to swing that. That was my sell I was getting ready towards. But neither bar 15 nor bar 16 closed the way I wanted, so there was nothing bearish pressure, and it ended up testing a trading range low, and there were buyers here, got a breakout, so this area is a buy zone, therefore bull flag, and we reached both of my targets, 3 of my targets, 7 high, measured move, which was the close of yesterday, and then the early target 53.45. I think we'll go higher. I had a buy order 1 tick above bar 18, and I kept waiting for bulls to close above 42.25. I said, okay, 2 bars, 3 bars. 3 bars is good, but the bar 18 didn't close 1 tick above 42.25. I'm just going to put a buy order there anyway because this is bull flag. We're going to test this high anyway. So they got me into the trade above 1 tick above 18. You could have entered as low as 1 tick above 16. Like I said, there are probably buyers above 16. You could have entered there. Last week's high is, I believe, 48.75. But let me see. Yep, 48.75. Yeah, you got to be patient, right? It's a terrible open. So, but the market is showing you a bullish pressure, and the bears are failing. Got trapped underneath EMA. This bar didn't close all that wonderful. That was a failed breakout. Pullback. Why didn't the pullback sell? And that's another, signal. If the pullback is not selling at the EMA, maybe it's time to, if you have sold it, exit out. But anybody who sold it underneath 11 or sold underneath 14 actually made money, okay? But that was nothing but a scalp. Then you get the wedge, flag, test the high. Now we have a breakout, pull back to the breakout point. Now bulls could maybe step it up. $45.75 and slightly above is still my target. Anyone holding? We're trying to go into the key price level on these Globex range, in the Globex range. But we do have a wedge here. You can measure from here. But we should reach this area and then maybe do a double top and come down. There is a bear gap here. It's going to challenge the bulls somewhere. We're already testing it. Probably some sellers here. But if we close it, we can go higher. I need bulls to do better here. I don't want to see it pull back here. Now, here is the problem. Notice the 7 high and notice the bull bar 20 close. It's not one tick above. Yes, we went above, but look, that body should have closed one tick above that. That should have been a breakout. If this is a bull flag, it's really nice leg, but now this is the pullback. Now bulls need to hold this pullback and then continue to go higher. So 45.75 is still target. 46 towards up 47.25, 47.50, all the way to 49 is one tick above the last week's high. Also target. We're still on the higher time frame. Stuck in this is wedge. Market is trying to squeeze out of it. But that squeeze to the upside, we could trap the bulls there because this is basically a could be a trap pattern. Market is trying to reach and test prior highs. Yesterday high, high 1, high 2 above is yesterday's high. They're trying to go and breach that and continue to go higher. So therefore, 53.50, 53.60 possible target. But this is way slow motion. So I did scalp at the 45, but I did say it's an institutional area, probably some sellers. But the moment we close a bull bar above it, if we can, then we'll go higher. We'll see a wedge top here, so they're taking some profit. They have met their goal, which was testing the Asia low. We tested the Asia low, but we're not able to go higher. What does this mean? Well, we could come down because maybe leg 1 pull back. That's not really, or leg 2, leg 3. Market could end up coming all the way down to this area. That would be bad. But this is cup, handle, really bad breakout. So it is possible. It is possible that bulls can fail here, and this is why you take profit. So too bad we couldn't get to the 45.75. Is now I'm looking to see if we can get bulls again at the EMA. Anyone sold with second leg is underneath 14. They were making money stuck, so they sell higher. A couple of points higher, maybe 5 points higher. Okay, that's a 4 point. They sell right? And no follow through. Maybe they sold underneath 21, right? They got a average break even right there. So that's why we went into that, happened to be the EMA, and then bounced. So if the bears exiting here, bulls can still take over and push this higher. Only if they don't allow bears to close a bear body below that average price that I just measured. If they do, then we're definitely coming down there, because anybody sold there, disappointed stock, sells up high. Bar 21 is not a good sell signal bar, but they're desperate because they know market can go and make a new high. And they know the bulls want to challenge that trend line. So if they're exiting right here, okay, then the bulls can take over, but I need to see that first. So this is a bull flag. It could be a final one, and we could certainly reach up there, trap everybody, and then start to come down. That would be great, but that's why I'm thinking market needs to push higher before the trapping. And that trapping might happen around high of yesterday. We could definitely reach the 49 area and then come down, but I think the market is deciding here. Again, if you're a bear, you sold here. You either sell the close or one tick under. That's your break even, right? I call that early break even, average. You're averaging, right? You'll take any price that gives you some kind of a relief to exit out. But really, the goal is to get to the 14 low. But they may not be able to. They didn't close a bear bar below it. So if the bulls now take over, we could actually make our way up above 20 high, reach to 45.75, go above it. Heck, we might actually go around 53.50, like I said. Pullback bars 21, 22. Bulls probably trailing buy stop orders above these bars, thinking that this is a really nice leg. Leg 1 pullback, leg 2 pullback. We need leg 3. Buy stop orders are probably already piling above bar 22 high. One tick above. See, I didn't buy, right? Why? Because my stop order is above the pullback bars. I don't know if the buyers are going to show up here. Bar 22 is not a bull bar, right? I can't simply buy the bear body. Bears are still trying to bring market down to their actual break even, which is one tick underneath bar 14. So they can simply do that. So it's better to put a buy stop order. I would probably trail it back down onto bar 23 now. Bears trying to get back to the 14 low where they sold and got stuck with 15. Sold higher is early break even, but they want to make money with that contract, probably targeting that is 14 low. So I moved the stop order above 23, but 23 closed extremely strong, so probably this is going to come down more. What about we get a double top neckline reversal? Yeah, we could get that. In fact, if bears close a bear bar below 14, okay, bar 14, it can accelerate and try to reach this area. So what do we need here? We already have a close below the EMA, but we need another bear bar. What about bulls? Well, they already took profit there. You needed to take profit there just like I did, right? So Can the bulls show up here? If this bar closes like this, I'm going to take the stop order and put one tick above bar 24. I'm free agent right now. I'm not in a trade. I'm flat. So I'm waiting for market to finish selling. And I do see market could go up higher, only if we can trap these bears one more time underneath the EMA and not give them a full break even, one tick below 14. If we manage that, then I'm going to enter. My only problem here is the bar 22 and 23, extremely strong bear bars, right? So chances are, if I enter above bar 24, they could trap me. So I don't like to buy against two strong bear bars like that. But many bulls will do. They're trailing their buy stops now. So they're looking for some kind of a backdoor to get in and then look for a 1 or 2 point. In this case, you probably get a 1.25. ATR allows that, but they may not get a follow through. So I've seen this many times. Is you try to buy an entry like that, you have two strong bear bars, and bears are on a mission to get to the 14 low. And if they do close a strong bear bar there, they can continue to sell into the 15 low. So that's a problem. So the question now is, do I want to enter above bar 24? But many people will enter with that setup. Market could extend selling into 39.50 and then come down even more, test the 15 low. All right, so look where we are. We just need to go one tick lower. Go one tick lower. We don't have to, but that's where the bears entered. They're still trying to tag one tick below 14 low. That's it. So they got it. So they're making money, back to making money again. That's good for them. The goal is to now, they see a bear flag with double top above EMA and neckline. They want to test the 15 low. So they will try to bring market down there. But probably buyers waiting. Okay, at the open of 16, close low of 15 is that area. If we fail to take out the 15 low with a bear body, we are going to bounce. So I may be able to buy into that since it's kind of a trading range there. But I'm still trailing buy stop order. I have it right now resting above 24 high. This is no longer relevant. Came down way too much. You can have it on your chart. Market's trying to test this area. See if they can probe and underneath 15 and close a bear bar. I did say that we'll see a wedge top here, so they're probably going to start to take profit. We've reached our target Asia low, so I've taken profit there, but I'm looking for bulls to reverse this market up and prevent the 15 low to be taken out. This is kind of a trending trading range. So you got a trend line here. Sorry. I did say that the open of bar 16, low of 15, that's a buy zone. Limit buyers are waiting there. Bears started to take some profits, also trend line. But we are below the EMA, we have 3 bars now, close below the EMA. So are we always in short? We might be, but we really need to take out the 15 low with a bear body, then pull back, and then start the sell. If the bears fail to do that, we're going to pull back up again. There's a trend line here, holding, but we could break that because we've tested 1, 2, 3 bounce, failed to break out. If we break this, we could come down somewhere to the EMA, and that EMA is down here. So it'd be better if bears really want to sell this. I want them to take out this with a bear body, then come up and then sell. So the EMA would come in. We might even leave the gap to EMA open, then we would sell. I would look to take profit there. But I need to see bears, are they going to be able to take out that 15 low? So I was really looking for this one to happen. This is what I was looking for earlier. Remember, and we could still get this, okay? But we made a new high. So we went above that. We didn't. So remember this bar right here, 15? I was hoping that bar to close like that. But we could still swing this down, right? Only if we take out the 15 low. Inside bar, 26. Buyers did show up here. But you're buying against a tight bear channel here. Possible leg 1, pull back leg 2. On pull back leg 2. Some bulls already bought above 26, but it's very difficult to buy because of this tight bear channel. Now, if anyone bought here, they will buy down here again, and they're going to try to break even. That's why that bar just jumped up. But we have to go and test the high of 26. And that's the effort by bulls buying again, quickly trying to bring the market back up to where they entered, which is 26 high. Remember I said the bulls started to trail their buy stops, and they see that this has failed. They put a buy stop order there, they enter, and then they get trapped. Immediately they buy again. They want market to get up here or as close as possible. It's very difficult to buy against tight bear channel. It's a two-sided trading today. It's a trending trading range. So bulls made money, bears are making money, and if you actually measure, it's a two-sided trading today. It's a trending trading range. So bulls made money, bears are making money, And if you actually measure, oops, they didn't really make all that, so it wasn't really a 5 points. But it was 225, 3, similar, anyone sold there, made also 3. Bulls bought above 26. Stock is buying again quickly, trying to bring the market back up to where they entered. But like I said, not a good buy to bar. That's why they're struggling here. That's why they're stalling the market so they can get their break even at the high of 26. It's not a good bar to buy. I'm going to open the question box. Go to webinar. Trend line broken now. Bears trying to come down to the 15 low. Take out the 15 low. They tried with 25, failed. If they failed for the second time, that's where the bulls will show up. But it's very difficult because ton of bulls are stuck above that bar. And for trying to buy against this tight bull channel, you have to wait for a better signal. So then bears try a second time. If they fail, then we're going to get more bulls. A market can reverse right back up around here again, this area. Bears who sold saw this. Failure to break out, so that's a swing. So that's why I said if you don't have to put your stop there, you put your stop above the first bear bar, this would be your target. So they're still trying to reach the 1 hour. And that's one of the reasons why I don't like to buy. I mean, one of my favorite things is always looking for some backdoors, and trailing the stop is order to enter, but these are two strong bear bars. You know, when you have a tight bear channel like that, you don't want to buy the first bull bar you see, because there's a target that the bears are trying to reach, right? Is basically they're in a swing. That's why that neckline, double top neckline, is their target. And then if there's 1 hour, they're going to go for it. So they're still selling. We kept the gap open to the EMA, which I talked about. Then this became from that low to that high is kind of a double top flag. Many are selling underneath 27. They entered there, but they entered too late. So there's still room that they can scalp, but they're entering at the bottom of some kind of a sideways trading range. But if they entered below 27, they are going for the 1 hour right here. Now, how does this get more bearish? We need to take out the 15 low with a bear body. And then they will sell the next pullback. They'll look for another bear flag. If fails, might get this very quickly and then reverse back up. Good close, so should get down to the target right there. So close. That's it. So we got the target. Wow, okay, that's nice. So they are actually now extending. Here is the 1.5. So might get that, and then 2R right there. All right, so now it's extending. All right, great job, bears. So now you have a measured move even. Wow. All right then. Okay, this is very cool. All right, I just hit sell immediately, and then targeted this. Couple of ticks above, already took profit before it bounces. So it got the 3R right there, right? Is what happened there? Well, I was really hoping that we would actually take out that and then bounce a little bit. So it just vacuumed down into this trading, to these lows. But here's the problem with this. You see this big breakout and a swing? From here to here, I already marked it. This is a buy zone. So we can get in here, but there will be buyers here, just so you know. So we got the 3R. Market can continue down. They got the measured move, right? And they can continue to come down more, but I took profit. So I took profit a little bit above because it was the magnet there. 1 hour EMA is, and I did say that we're probably gonna test this and try to break. It was still holding then, but now we came down. We could come down more. I just want to see where this bar is gonna close. I've taken profit. It was just too fast. I hit order, market order, sell, and then I was going to settle in here, but then it just started to accelerate down. Okay, 3R, then the magnet. But I'm not going to wait here for 33 to be tested, just to profit way above. All right, so that ended up becoming a, like I said, bear flag, double top. I had a trade here. I had a trade here, and I had a trade here. I went long and long. I did not sell here. I should have, but I didn't. I wanted to see what the market was going to do here. I contemplating on should I get a backdoor, but it's very difficult to buy when you have bear bar stacking and it's a tight bear channel. Anyone who buys above it is going to get trapped because it's going to become a bear flag. So that became a bear flag. Once I see the confirmation, everybody's entering below 27 low. That's the first target. They accelerated way too fast. Whatever caused this is just accelerated sell-off into this low. But I don't know if the bears are done here. They might come down a little bit more. There is another buy zone here, but they breached it. So I would like to actually see bears do better. My timer is not showing, so just give it a second. I have, okay, so 58 seconds. If the bears can close this bar below its midpoint, market can continue to sell further down, okay? This is the area I'm interested. If I'm going to buy, this is what I want to buy. I don't want to buy here. Okay, so if I buy here, yeah, it might go up a little bit, but eventually it'll come down here. This is what I want to buy. And in fact, market can keep pushing lower and get to here. This is what I want to buy. So if we can close below the Globex low, we'll continue to come down. Now we're testing an area of interest. We bounced once. This is the second time. But if we break this, we can continue to sell into this area. Okay? So let's look left. This was support. I'm more interested in here. So that's 29. And then 10 points below, I don't know if we would go all the way to yesterday's low, but we could. We did not close bar 29 is all that great. It's actually is above its midpoint. So we're probably going to bounce and we might go up to these levels and maybe look to sell again. So I like to see now a little bit of pullback. Because if it's too low to sell, nobody wants to sell here. The bears could not close that bar down below. So we're going to bounce now. So we're going to look for probably 15 low. We're already testing the one low. But anybody who bought and had stops down here, those stops ran. So now bears are selling, right? They probably want a lot more lower prices. It's just that it's too low to sell. So it has to back up a little bit. Back up a little bit. Open of the day tick price. We might go test it perhaps. Now, I think the bulls have taken profit on the 15-minute because they know that this area is strong resistance, and they had a wedge top and they had a 2-bar reversal. They probably exited underneath that 15-minute bar already. So you got a measured move target down. Can market sell more? Yes, but we need to pull back a little bit. What if we start to go above the open of the day? Can we actually go back to the EMA? We have 2 legs here. Leg 1, pull back. Leg 2, okay? So if we can find some sellers here, we could get another leg down, but we could have a double bottom. Then I would look to buy. But I don't know if I want to buy this. This is not. They're buying the 50% of this pin bar, but it's kind of difficult to buy, not interested in. The question here is, with the past few days, would a swing be considered closer to 10 points? Swing is 10 points. So is 5-point is scalp. Anytime market continues to close beyond 5-point bars in the same direction of the price action or the price path, then you can reach 10-point. 10-point is the minimum swing. Anything more than you're looking for 20-point swing. Globex low is there. 34.25. We have breached it, but we tagged an area that is support, and it was actually a buy zone as well. Notice that there's a bull gap there. From there to there. Some will say that we closed that gap, but we didn't. We need a bear body overlapping. So this area is support. So I took profit with measured move targets. That was low 2 from the highs, or you could say this was a terrible low 1, but you could say low 2, low 3, then we made a new high, low 1, low 2, sell. So now I want to see bears show up again, a little bit higher perhaps. See if we can actually go and test 15 low. Really nice, good inside bar. There's a bit of a bullish pressure there with 29 low. Is market probably some buy orders above bar 30, but you'll be buying into resistance from 15 low. We're probably going to go and test there, but sellers are probably there. What about sellers selling right here? I think we're going to go a little bit higher. Depending on the ATR, is the S&P traders profit was always 1 point or 5 ticks. 4 ticks is 1 point, 1 tick extra to cover your commissions. To fill your trade is activate your scalp trade. But those days are over because market is a lot more volatile. We're getting a lot more bigger bars. And back in the day, market was like this. Okay. Let me see. That's a 60-minute. So you would get this kind of price action. Okay. So trying to make a 1-point scalp was a big deal back then. So this is the kind of price action, the bars you'd get, right? like something like this, like that. But those days are over. We're getting a lot more larger bars. So average true range is now minimum scalp is 2 points. So that's 8 points plus 1 tick. So that's 9 tick. Anything more than that, you're looking for a 5-point scalp. So if you enter with a good second entry long or second entry short, look for a 5 points. Try to get 5 point or less than, a little bit less than that. If market continues in the direction, then you're looking for a swing 10 point. Okay, so I did say that we're probably going to go higher. We're trying to reach the 15 low. Bunch of inside bars. If the inside bars fail, bears can sell again. We might need to go and test 53.39, perhaps, but we came so close, 1 tick close. I think we're going to go and test the 53.39. And see if there are any sellers there. But basically, you have a trading range. Trading it's an inside day. So this is the low of your trading range. Anybody who bought here, they're aware the market can actually come down more. One o'clock is important news. That is 20-year bond auction, and 2 o'clock is FOMC. So it's already noon. Can market go sideways? Although we went way below bar 1, but it's trading range, right? So we made a double top. Market came down with several legs, right? But we did not, on this chart, we did not take out that low, but it started to go sideways. Here's another option. So we do come down, but we don't really take out those lows, and then eventually have another leg down. And that's what I'm looking for. And I want to see some kind of a double bottom with 29. Then I like to see if FOMC can reverse this back up. So trading range lows, but there's a much better place to buy here. So we could get 3 bars inside the range of 29, probably sellers at the high of 29. They could prevent a bullish reversal, and we could come right back down to the lower third of 29. So probably sellers above 29. We're about to test. Okay, we are testing 53.39. Like I said, that we would test it because inside bar is strong. People did buy. Traders bought above 30. We're kind of breaching that 15 low. But still, even if we go above 29, I think the bears will try to sell. Now, here's what can happen. We did take out that low, and market reversed. Goes back up to the bar, but think of this as a 2. So that one big bar, think of it as a 2 bar. So selling started with 28. We could go test there even, but still we will come down. These bears stuck, they will sell. Okay. So, but that could put us into a trading range into 2 o'clock. Bull stock buying is the measured move reversal and trying to get to the safety. Problem here is that, yes, this is a really good bar, but it's still going to probably come down. What about this is becoming a V-shaped recovery? Or sharp reversal in this case, that's what we call, right? Well, then if you entered here, maybe stop here, then that's where we're going to go. But bears are stuck. So I don't think they're going to let go this easily. So if you are a bear, you could sell either right around here, 40.25, or the market is going to go and test the 53.41. But if we start to close above 53.41, then this is a sharp reversal. Remember, I said with that example, they have only one bar, strong bar with no lower wick. So this is the wick, right? And then it goes up. We have 2, 3 bars. So if we go up here, there could be sellers right at the EMA. So the stuck bears down here could still sell, okay? But now you have 3 bull bars. It kind of makes it difficult. If bulls really want to push this higher, then they want a 10-point out of this. Their 10-point is, since they started to buy, they can push this up to 9-point or 10 points. So if you did buy above 30, I did say we're going to go to bar 53.39. Then I'm going to look to see if there are any sellers. No sellers showed up. So then market could push towards the 10-point zone, 9 to 10 points. So that would be 41.50 to 42.50 area. They can't because this is now becoming a V-shaped recovery. But bears will sell. These bulls will take profit there, and then we will eventually come down, except then bulls will buy once again. So no sellers showed up. Bulls stuck up here, both down here. They're at a 80% probability of getting break even. Now, with the first pullback, they might buy again. That could bring us back up here. I'm more interested in the 41.50 to 42.50 area at this point. 31 follow through after a good inside bar is, so what you do is if you buy, you take profit at the EMA. Anything from there into the 10-point swing is basically your runner. And there will be a lot of profit taken here. So we get an up with 2 legs and then we come down big time. So market is in some kind of a confusion now. And you can see that we are in a trading range. Don't need this anymore. Can market come down and sell into here? Well, I need to see the bulls actually take profit either here or 1 point below. Then I'm going to look for a sell back down. Since now we're in a trading range, open of the day becomes an important price level. But we have a V-shaped recovery, so what happens is we go up, we grind. Eventually we will come down, and then they could buy those, but that's how we could end up in a trading range or sideways price action until 2 o'clock. And then the 2 o'clock is we could get another leg up, could get us up to here, only to sell once again. We didn't really tag the 9-point, that's 41.50, so I'm going to wait for bulls to try to get there. So leg 1, pull back leg 2. Can the bears get another leg down, or leg 1, 24 separates, that's leg 2, 25, pull back leg 3. We reached the leg 3 starting point, 27 high. Stuck bears, okay, down here, they want to sell, but bulls really didn't make any money here, so I would be careful is exiting out of this long. I think they're still trying to get to the 41.50 or 42.50, somewhere in between. Exiting out of this long. I think they're still trying to get to the 41.50 or 42.50, somewhere in between. What about going all the way up? Can we do that? I think this area is problem. Trading range is trading range day, double top, right? Bear flag, sells pretty strong. This one has 3 legs down, and then finally reverses back up, right? With small pullback bull trend. We're having a similar reaction, but eventually it goes sideways, okay? And then somewhere around like 1, 2 o'clock, we get a brief leg up, and then goes back and closes around the EMA or below the open. So you should pay yourself here if you bought above 31, above 30, even somewhere. I would not buy at the EMA, because if you bought here, and that's what they did, they took profit at the EMA. Now we have a close above the EMA, but there's not much of a room here. So if you buy right now, these bulls taking profit here, you could get trapped as it comes down again. So something like this, right? You have double top, and we come down right around the EMA. You start buying above the EMA while they're taking profit. You could be stuck in this. You might want to wait for that pullback. Okay, here we go. So we are now in the 10-point swing zone. We could end up coming down for like a couple of points. What about going all the way up, right? So that small pullback bull trend, not the best one. This is a lot better, but it's kind of in a very climactic form. But still, it goes and tests that high. So we could end up going up and testing that trend line, and then come back from that trend line, right? And then we go back up, and then finally close the day above. But that will put us into a triangle kind of close, and that's what we're having right now, right? So close, and that's what we're having right now, right? So it's probably a flag, final flag. So how would you have measured this? I would have measured this way. That means I have 1R, that's the 2R. So we could still get there, but I'm not sure. This is where everybody else, every bull will pay themselves. Okay, so we could come down a couple of points and then go back up and reach the 2R and then come down, right? That could put us into a sideways price action into the news hour. So market could be still trying to reach that, okay? Or you could say, want to measure this way, but I doubt it. I don't think we're going to get there. That's not how I would measure. Measure like this, and we're already at the 1.5 R. Happens to be 10 point. So you see why I said take profit here. This can come down a couple of points. Now, bears who are stuck, okay, looking for a bear signal. So if they get a bear signal bar, they're going to try to sell one tick underneath that bar or the close of that bar. But the problem here is that you have this bullish channel, tight channel, very difficult to sell against it, but they're desperate to break even. So that's why we could come down, maybe even half, 50% pullback of this leg. Are we always in long? We might be, but it's just a trading range trading at this point, and that right there, that's their signal. So if you are a bear, right? So you sold, you're stuck somewhere down here. I'm going to use the edges, and you sell that close. My only problem here is that if I sell this bar, say I'm stuck, I'm not stuck, but if I'm stuck, this is just too difficult to sell. As far as I'm concerned, market could go even higher, but there's a desperation, right? So they're probably selling with multiple contracts to get an early break even average price there, but not here. Since this is a 10-point, they waited for bulls to get to the 10-point swing, and they know those bulls will take profit. They could be selling into that rejection bar 34. But gosh, I mean, this is just very difficult. 1, 2, 3, 4, and a bullish pressure. The best you might end up getting is right there, and then go back up again. But I always expect a couple of points down. We might even get a 5-point down from here. So that would be 325. We might get 5.525. It's so close. It could get us to the average break even, but this is very difficult to sell against. So that's why is you measure your break even, right? You measure your measured move, take profit. There's support here screaming at you. Support could have been also from here or from the neckline. We've tested it, okay? So it's going to bounce. Trading range lows, always going to bounce, and it could go 50% of this trading range. So I don't sell bars like this. To me, this is a profit taken, and the market could go up to 2R. Like I said, if I measure from here, that is the 2R. Let's see where that ends up. That's probably, yep, that's it. That is the top of the 10-point zone, right? The top of the 10-point zone is 11, but it can go 3 more ticks up, okay, and then fall back. So that happens to be 2R. So you see how the bulls are still pushing? This is why I don't sell the first bear bar if I have consecutive more than 3 bull bars. And if I'm desperate, I would never sell a bar like 34. So that was profit taking, couple of points. I don't know how many. Okay, so that was a 2-point. Could have been better, but that means bulls want something. That means they want to test the 2R. $10-point is still 42.50. That's where they're heading towards, but they can accelerate and get to the 2R. That will be the top of the swing zone before coming down eventually. I did buy, took some profits, and now I'm holding, see if I can get to that 2R. Anyone sold bar 34 is either close or 1 tick under. Their stop is about 3 ticks above the 2R, or 1 point above the 11 point, okay? The top of the 10-point swing. And what they want is about 3 to 5 points down. So they need a second sell signal, most likely. 3 to 5 points down. So they need a second sell signal, most likely. This is why if I'm stuck, I would not sell this. I wait for a better signal or the second try. So look at this from this angle right here. You got a double top. Is market sells, gets a measured move. Support right there, right? You got a support, but our support is under the EMA. But you see what's happening here? No one's going to sell against this right away. This could keep going up. In this case, we actually ended up going above this. We could do the same. And we could keep going. Small pullback bull trend goes to the trend line. Somewhere around 2 o'clock, comes back down to the EMA, and then goes up again. But you're at the 10-point zone. Rejections are actually very weak, so I'd be careful selling here. We'll still see the 2R as target. At least look for 4250 test, or 1 tick under, 1 tick above. 4225, 4275. We're not so far from 2R. Struggling at the 1.5. Risk reward. But we close another bull bar here. We're going there. No, I would not trail a sell stop underneath these bars because this is a sharp reversal trying to get back up to the trading range highs, right? So it's buy low, sell high. Bulls proven that they were stuck up here. So what they're getting is, if you are a bull, right? So you're stuck here, you buy here, you get your 80%. They're trying to get back up all the way to that high again. As far as I'm concerned, this is what market can do. Come down, and we get above the EMA, keep going for until 2 p.m. Then we would pull back again, and then see if the market can buy that pullback once again. And then get us back up to these highs. These are all magnet now. The high of yesterday, these, let me mark that. Clean this up. Is this trend line. We get above the trend line, then we will continue to go into here. So what about this becoming a one big bull flag? Look at this. 1, 2, 3, huge bull flag. So if this buying continues, right? We test these highs. Because it's a trading range, it's probably going to be a leg, and then we come back down, and I would wait for the FOMC. That could get us back up here. So it's still considered a sharp reversal. It is trying to go and test the prior high. 2R is 43.75. What about bears? Can they actually sell? So get a trading range, right? Go above the EMA, make a double top, right? So, and we cannot take that high. We cannot take that high. Market sells with several legs and then reverses back up. It's not as sharp as what we had, but it still utilizes these support areas and goes up and then starts to swing back down. That swing back down can get us all the way down here that I talked about, okay? Then I would look for bulls again, right? So we can't seem to get above 1.5 R. There are no bull bars closing above this is 1R, this is half R. So they extended the profit taken as much as possible. Is this pullback could still generate more bulls, but like I said, it has to take profit. But bears are trying for the second time. Where can they bring the market? It has to close really bearish for these bears, right? To sell the close or sell one tick under and bring the market down to somewhere average so they can exit. So it could be, I generally look for this, right? 50% pullback. We couldn't reach all the way to 42.50, but we did test it 42.25. That's a 1 tick failure. So that's a 9.75, not 10 points. But hey, that's still good. They're taking profit, right? So now bears are, okay, we need to sell and we need to break even. But I'm probably not going to sell this because this is pretty strong. It's looking for a support to buy again. There's a gap here, and that's another reason why I would not sell, is if this gap holds, bulls can continue to push this into 2R. It's just a pullback a little bit from the 10-point zone. Now we have consecutive closes above EMA. If we don't close a strong bear bar and we don't take out this gap, bulls will continue to go up. So the bar 21 becomes target. Can the bears resume the trend? They might be able to. Here's how they would do before I leave. Is right now the target is this area, okay? This is where the market wants to go. If the bulls continue to close bull bars and take out these highs, this gap bar, okay, moving average gap bar, above, so it created a gap. Is if the bulls take out these highs with bull closes, then we will go and test these highs. Those are the magnets above. But if we go there, and if we fail, right, we could go there, and then come back down, right? Start to come all the way down here and start to take these lows. That's the resume of the trend. We could even take out that low. That's because we have a strong support here. We might end up coming all the way down here and then buy again. That's a trading range trading. We might even come down a little bit more, although I'm not so sure. I think this area, if the bears resume the trend somehow, after failing to take out these highs, then we would end up coming down. I would take this. This would be my new support right here. So it's very important that these bulls can get to their 2R and start to close above. We could continue to go higher, but it's lunchtime, so we are bound to go sideways. And with the news, if we cannot take out these highs, bears then will try to take out the bar, the inside bar 30 lows, and the close of 29, bear close. That could bring market down to here. That would be a resumption of the bear trend. But for now, I think we're going to end up sideways. Possibly go up maybe, and then come back down. Yeah, from now on, it's difficult, but bears can sell here. And they can sell if they actually close this gap. If they do close the gap, then you can put the stop above the gap and then sell the close of the bear bar and continue to look for a 1R, 2R, 3R, 4R, or prior low to be tested. Is if the gap stays open, then that's it. This is nothing but a couple of point pullback, and the bulls will bring it back up to 43.75, above 22 high, 21, and they will try to close bull bars. Failure will bring it back to the EMA once again until the news. All right, so that's the plan. I'm going to go grab some lunch, and then I'll come back and see if I can trade the afternoon later on. All right, you all stay safe. Just go replenish some energy, get some lunch, go for a walk, clear your head. There will be plenty of price action left. 1 o'clock is 20-year bond, so you guys need to watch out. That could be a big move. Okay. Bulls see a bull flag. They want to take out the highs and make new highs, which we can, but it's an inside day, so therefore it's a trading range day. If I want to buy, I would wait for market to bring price down here, then I would look to buy. If I see bulls taking out these highs and the trend line, then I would look for a pullback to trend line. Might buy, but I'm buying too high at the trading range high, so that's probably a scalp. But right now I'll do nothing because I already taken profit there. Okay, bye everyone. Oh wait, let me check something. I think I'm alone today. I mean, I kind of exceeded my time, but am I alone today? I think no one's coming after me. Right. Okay, so tomorrow is also me, and then Tim Fairweather and Brad Wolf coming on Friday. Have a good day.